Markets are doing exactly what markets should do. And while there's a lot of headlines and a lot of fear and panic right now, we are now getting to those levels of support that we talked about 2 and 3 months ago. Here's what you need to know before the bell. Markets did sell off yesterday. And again, let's take a little trip back in the way back machine here and go all the way to June when we wrote an article talking about the sell-off needed during the summer months, right? So you typically have the weak summer months. And then just a few weeks ago, like 3 weeks ago, we wrote an article that said, hey, October, the weakness could continue in October because that's just kind of where we are in the cycle right now. And again, from a seasonality standpoint, as well as from the market standpoint, markets are doing exactly what markets should do. And again, while there's a lot of headlines and a lot of fear and panic right now, we are now getting to those levels of support that we talked about 2 and 3 months ago. Again, the market's been a fairly orderly decline, nothing egregious going on. Again, we had a sell-off yesterday. Yes, it was a pretty sharp sell-off, but again, nothing out of the ordinary that we haven't seen during this entire decline that we've had really since June and the peak of the markets in July of this year. And as we talked about previously, it was very likely and very possible that the markets could test the 200-day moving average on that kind of sell-off, because that would be normal for any type of correction in any given year. As we stated back in July, hey, a 3 to 5 to a 10% correction, certainly normal within the context of any given year, and that would line us up with about where we are now at the 200-day moving average. So again, nothing out of the real ordinary here going on other than just having a correction. And see, we seem to forget that the markets had a 15% advance from February to July. So we had this massive out of the ordinary advance for the market. So this correction so far, absolutely normal after that kind of advance. Because again, if the markets didn't correct, and this is always what happens as investors, we think markets are just going to go up forever. And now we all believe the markets are just going to go down forever. So again, this is just kind of market sentiment and how we do things as investors. It's always important to keep some perspective about what's going on. If the market hadn't corrected and just kept on the trend from earlier this year, you have a 30% gain for the year. And that's very much out of the ordinary for the markets in any given year. So again, not surprising you're having this correction. Now, the question, of course, on everybody's mind is, could this correction go more, right? Could we have a deeper correction? Absolutely. If we take out this 200-day moving average, there's not a lot of support until we get down around 4,000, 4,100. So there is certainly some downside risk here if we take out the 200-day moving average. Should not set that aside as a possibility. But again, we're going to get into this cluster of support that we had back in February and March. And remember, back in March, we were having the whole event of the regional bank crisis. So there is support here if the market breaks. But again, it's going to be right around 4,000 on the index. So again, there is certainly some downside risk. That's about 200 points lower than where the markets are sitting right now at the 200-day moving average. So again, certainly some risk here. But with markets deeply oversold here, both on a MACD sell signal basis and the relative strength basis, look for a rally that's going to get you back up to about 4350 on the S&P as an opportunity to reduce some risk if you are concerned about a deeper decline going into the end of the year. And that's what you need to know before the bell this morning.